Good morning, guys. It is 1 minute past 11 on Thursday, the 11th of May, 2023. And if you've seen the description for this week's video, I have quite simply said, put your money where your mouth is. And I suppose it was that brash title that gave me the inspiration to use the can for the opening music this morning. It seemed quite appropriate to have something fairly bold. Recently there was an issue that came up which meant that I had to make a bit of a decision, or at least I felt it did, and basically it had to do with child trust funds. And despite the fact that one of my kids' trust funds is due to mature in the next year or just less, the other parent had felt that it was possibly no longer wise to continue investing as had been the case for the past number of years, despite the fact that there's been a total of roughly 14 grand invested in it. It's currently worth just over 20 grand, but for somebody taking a short-term look at it, the amount of money that had been invested in the past 12 months isn't reflected in the current portfolio value, in as much as it hasn't increased by at least as much as that. But as we know, that is the nature of investing. As I say, I had to felt I had to make a bit of a decision, and the decision I made was that I trusted that the market would return well enough to provide growth over and above the 4 point something % rate that they had come up with as an alternative place to put the money until maturity. As I say, I had discussed this with the recipient and explained pros and cons. So I have basically guaranteed to make up any shortfall that is less than the return that you could reasonably expect from a 4 point something % return. And quite frankly, I'm more than happy to do that. I believe in the market. I believe it will recover, and I think it's going to recover big over the space of the next 12 months or so. Particularly given that the current crisis is already ongoing since around January 22, and normally the market recovers within somewhere within 12 to 24 months. It is getting into that kind of territory now. So just moving on, looking at the market itself, for today we're currently showing a 0.75% increase, roughly 2% for the week, and virtually no change in the past year, other than the fluctuations, as you can see, on the roller coaster that we've mentioned before. As things stand, market currently open, portfolio currently only just in the green, to an insignificant margin. Let's go ahead and buy our weekly £120 worth of stock in the S&P 500. Seen here the Vanguard version of it. Vanguard, of course, the fund that offers the lowest fees, or near enough. Certainly historically the lowest. And this is the Trading 212 practice platform that I'm using. We're going to be buying roughly 1.91 shares at current market value. That has been placed, it has been executed. We got 1.918, and that was for 62.56 and a half. Let's have a look and see if things have updated. So I can see down here that this figure is different from this figure, so no, it hasn't updated, but basically the new portfolio value is currently 6,960, so just shy of £7,000 invested. And the average price currently 62.56. Current price 62.56, so it's exactly sitting on our average purchase price as things stand. I suppose you could argue that there's no better demonstration of dollar cost averaging than that, by consistently buying shares over a period of time. You should, provided you're continuing to purchase, you should end up near enough at the average price, assuming that the value doesn't fluctuate too much, and that the market is fairly stagnant, which appears to be the case at the present time. Guys, before I call it quits for today, let's have a quick look at the notifications. So that's our order that we've put through. Biggest stocks, you're looking at Disney, Beyond Meat, Unity Software, Robinhood Markets, Fiverr International, Marathon Digital. High volatility on Twilio. Not sure what that is, to be quite frank, but it's down 15% after a revenue forecast of less than $1 billion. It's obviously a significant company. Moving on, Rivian jumps 13% after reaffirming production target amid EV uncertainty, so that's got to do with electric vehicles. I've not heard about this particular company. Things I had heard in the not too distant past, well, as we know, there was a lot of companies or production lines shut down or reduced in capacity during COVID. That appears to have impacted the semiconductor market very significantly, or at least the effect of the semiconductor market slowdown has been felt worldwide in anything that involves electronics. So that would have been significant enough for electric vehicles, but add to that the fact that the metals that are required to make the batteries for electric vehicles seem to be in fairly short supply, and quite frankly, some of the places that some of the stuff comes from appear to be using mining techniques which are neither particularly safe for the workers, and also not particularly fair either, in terms of the fact that they appear to be in some cases making use of child labour to mine this stuff. So I wouldn't have been at all surprised to see, and I won't be at all surprised in the future to see issues regarding electric vehicles. It is unfortunate that Tesla is such a big player in the S&P 500, because I feel that there may be trouble ahead, as they say, but we will see how that goes. Airbnb drops 12% in response to cautious outlook for the current quarter. Moving on, here's some more biggest stocks: Virgin Galactic, Rivian that we just mentioned, Airbnb, Roblox and Twilio. PayPal drops 11% on lower operating margin forecast and decreasing consumer spending. Well, quite frankly, PayPal appeared to want to engage in censorship of their customers, if I'm not mistaken, particularly as regards YouTube, and as far as I can recall, had they not arbitrarily removed money from people's accounts. I know I closed my PayPal account. I'm not sure if very many others did likewise, but I'm sorry to say, but for a time at least, free speech on YouTube certainly, well, actually it's still the case. Free speech is no longer free, and PayPal made that abundantly clear by applying financial penalties to people who were seen to be in breach of the narrative. And that's all it was. It was breach of a narrative. It wasn't breach of any legislation or anything like that. No doubt that may have changed in the meantime, as they have sought to bring in legislation that would cover some of these crimes, but at that time I don't believe PayPal had any good basis for acting as they did. Lucid, don't know what Lucid is, but they're down 6%. Nothing very significant. Palantir up 14%. I very vaguely remember reading not so long ago that they had fallen by something similar, so looks like a bit of a yo-yo on Palantir. Oh, sorry, no, I am wrong. I'm mixing up Palantir, which has to do with AI, with Peloton, which is to do with cycling online. So my apologies, I've just caught myself on there. Fresenius, I don't know what that is. They seem to be doing okay. Grifols, don't know what that is either. Guys, there's lots of companies you can find out about if you choose to look into them. I've said before, and I'll say it again, I believe that investing in individual companies is a fool's game. I think that nobody can really be certain of how well or badly a company will perform in the mid to long term, and despite whatever information is put into the public domain by a company and for its investors, it would not be the first time that we have seen a company that has been listed on a stock exchange found to be either intentionally or not misleading the people that invest in it. So rather than invest in individual stocks and shares, my advice it would be to look at a product more like the S&P 500, where you have what is by definition a well diversified portfolio, and each time you invest into that, you are buying a small chunk of each of those companies. That way you're not really at risk of holding too much of one and not enough of something else. Despite what I was saying about Tesla there not so long ago, the reality with an index such as the S&P 500 is that they are, as I think it was J.L. Collins said, they are self-cleansing. And whenever we say that the index is self-cleansing, what that means is that as a company performs less well, then the weighting that it has in the index in the first instance will reduce up to the point where the company ends up being replaced by something that is performing better, and ultimately that's good for investors, because it means that if you don't continue to be competitive, you fall off the index and you're replaced by a company that shows more potential. So guys, that is pretty much it. I would just like to thank you for watching today, and if you enjoy the content, please feel free to give me a like and subscribe to the channel, and I'll be back again in about a week's time with more investing. Thanks for watching.